Hello traders, Gary Wagner here. Just about 10:30 in Honolulu, 4:30 in New York. It is Wednesday, the 22nd day of October 2014, and this is the daily report for gold and silver. We do have the equities markets as well as the precious metals markets under pressure today. We're looking at gold currently trading at 1240.67. That is on the lows of the day. High 1249.20. The low is 1239.90 as of right now. And of course, we did trail our stops up tight. I actually expect them to get hit. I'll explain why I did that on today's show. First, let's take a look at silver. So, dramatically lower pricing in silver, currently trading off about 36 cents on the day, 17.14. The low 17.13, so we're just off of the low. The high 17.49. So traders, first I want to catch up on our current trade, my strategy, and my reason for really trailing the stops up. It is basically technically based, and what we're looking at is as follows. Let's go ahead and blow this chart up just a little bit. And so we're looking at a half-a-day chart, standard candlestick format. I like the half-day charts because, one, it breaks up the morning and the afternoon session so we can distinguish what I call overseas and mainland trading, the two distinctions. And it gives us a little bit more information than a daily chart, but still gives us some good accuracy. As you can see, we're trading roughly 1240.93. I did move the stop, and we moved it, I believe, to about 1350, just above what the low was then, and the low is still now. The reason for that is that when we look at this chart, in terms of various support and resistance levels, I talked about the fact that typically as a market moves down, the subsequent counter wave will go anywhere between, say, 50 and 75% of what we have seen in terms of the sell-off here. We also yesterday talked about the fact that what that gives us really is really a sweet spot, so to speak, between 50 and 75, and that's this particular zone right in here on the half-a-day chart. And so as we got into our first trade, we were, of course, short. 21, market moves down, breaks below, starts to come back up. So then we go long at 1208, roughly here. And then we covered that trade at, I believe, 31 or 33 right in here. So we took $25 out of the market. But lo and behold, we had a really sizable or nice break above this particular line here. This is 35, and it's a 38% retracement. So I felt we probably are looking at, call it the second leg, so to speak, of this particular move. So we had this move up. I felt what we could be seeing is this move down, and then we would break into this territory and stall somewhere between, on a high side, 13, on the low side, 1252. However, that was our model, but in reality what happened was, as it got to this particular price point, which is a 50% retracement, 1252, we saw it begin to weaken. And you can see that weakening coming in right here. So the question is, are we going to get a full-blown, call it a corrective wave within that? In other words, are we going to get this 1, 2, 3? And if we do, where would this two-wave take us, and would we want to position ourselves at a better price, meaning lower, rather than wait out and see if in fact we get stopped out or not? And since our stop was below 1230, and I felt that there's a real opportunity right now with the way the market's looking over the last couple of days, where it does appear as though it's selling off. If it does begin to come down, we've had 3 profitable trades, our last 3 trades. This trade here, if we take a loss, I want to keep that loss at a strategically low drawdown point. I'm not comfortable with it. But more importantly, it wasn't about whether the trade was in profits or losses, but what it was mostly was the real inability for this market to go past this 52. And we really wanted to see that. To me, as you know, I've said this over the last, at least the last day, if not the last couple of days, but it's essential that we close effectively over that 50 point, the 1252, if we are going to look for a continuation of higher pricing. We certainly didn't see it, so what we got was this, and we got a definitive V, and the V, of course, as I said, is on a short-term chart, but if you look at a daily chart, it appears very, very similar. And so I'm actually referencing the chart that we used when we entered the trade, and what caused us to go into the trade itself was a break above this 1241. But it's quite clear now that not only are we not getting that continued break, but we actually found resistance, and realize this resistance is in a very logical place at 41 because it really deals with this particular low right in here. So the fact that we're trading right at this point, that's another reason that I had some caution, and I felt that that was necessary. And then lastly, when we do look at the daily chart of gold, we have pretty much, and it depends on where we get our close here, but whether it's an incomplete dark cloud cover or a dark cloud cover itself, it closes well above the prior trading range it's closing into, and the question is it at or below the midpoint of this candle? And that's what we would have to determine. Just from my eye, it seems like it is not at or below, but just slightly above it. And that's why we could label this an incomplete dark cloud cover. Now, in terms of taking a call like this to initiate a short position, we certainly wouldn't do that with just this candle. What we would wait for is a confirming candle. That would mean on the following day, meaning tomorrow, if this is how the market ends up resolving itself, we get a candle like this. And this candle, of course, would have to be a red candle, first of all, with a a lower high and a lower low than the prior candle. And this would actually confirm the dark cloud cover, and that would issue a sell signal in terms of straight pattern recognition. The fact that it comes at a pretty important fib point, that would add credence or weight to the probability, the effectiveness of the call. And then we want to look at other markets that are currently affecting gold. Equities markets are trading lower this morning, but we saw the equities markets pretty much moving in tandem with gold over the last couple of days. We actually made a note of it, but really this to me is the key factor in terms of the potential for more weakness in gold, and that is this is a dollar chart, and as you can see, we have ranged back up. Let's make sure that that this is updated, and it will just take a second to update. But as you can see, we do have an up day now, trading above 85, 85.40, but we've had a series of green candles, small bodied nonetheless, doji, pivotal point, red candle. So it's consolidating and forming a base similar to right in here. And what we could see is this market really take off from that base, as we are seeing now that the candle is correctly drawn in for the day. You can see that we've had this nice move in the dollar and thereby putting pressure on gold. So what about silver? Well, we are currently looking to either see the market pop back up in gold or get stopped up with a couple of dollar loss on the trade. As I said, I really don't see risking any more than that on this particular trade, simply because it has stalled at some key levels. I believe that if we see silver break through 17, we'll probably see it head back to about 1660, 1665. We'll have to see. You really need to look at the longer term aspects of this chart, and to do that, of course, we've got to add a little bit more historical data. We'll just go ahead and add in a good data block here. But really what you want to look at in this market in particular, you can see that we've really taken out these lows here. So to look closely at the market, what we need to do is really even compress it more than it is. If we do that, because these are all the areas that we've broken through, and here's the thing, if we do see silver go back under pressure, we're going to be looking at these prices back from July through October of 2010. And you'll see that that's right in the area that we're at. So we're at a pretty critical level here too, because if we look at these lows here, we're really matching them here. So I would look for, as I said, lower prices if we see gold begin to falter. Hopefully we won't get stopped out. Hopefully the market will return to its upward move If it does not, we've protected our equity. If it does, we will add some profits to this current trade. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.